Okay, I'm streaming. Well, happy Memorial Day to everybody. Happy Memorial Day 2021. This is Red Baron. Thank you very much for joining the show. Now, we're starting a new segment here. We just did a dry run on last week, so this is our first official launch of the first official show. So, welcome to Tech Talk Monday Tech Talk with Red Baron and Red Bear on the phone with me here. So we'll be getting to him in just a second. We're going to go ahead and take a look at the market right now because we've had a hell of a weekend already. So let's go ahead and take a look and see what's going on. Go through a few charts here real quick and then we'll get on to tonight's interview. So hang on just a second. I'm going to kill the mic and I'll be right with you. Okay, guys, looks like we might have a little bit of a break in the beat down here. You know, every once in a while the hoodlum's got to back off a little bit and let you lick your wounds. So apparently that seems to be what's going on here. So right now, currently, it looks like we're having kind of a little bit of a resurgence, and Bitcoin's starting to move up a little bit. We're in the 37.3 range, but don't get too hopeful just yet. I'm still calling for the make or break zone. So as we all know, when the magic chicken bones foresee something, that's exactly what's going to play out. So we discussed in the last Tech Talk, we discussed a Wyckoff situation, the Wyckoff patterns. And basically what this is a way of building false hope into the people that invest and then taking that hope away. So it's just the nonstop rug pull again and again and again. So as I see this, I don't see anything to be very optimistic about. However, it does look like it might make a run. So we're kind of in the if-then standpoint right now. So let's take a look at a couple of things here. But as long as I'm doing this and as long as I'm on this chart, let me give you a little bit of a possibility of a move. Now, all things being equal, and they're definitely not this weekend, we could very well see the 39.5 range, but that remains to be seen here. So if all things are equal, if they're playing fairly, let's just say it that way. If they're playing fairly with us, we will be at 39.5 here in the not too distant future. I would say probably by, it is roughly 7 o'clock here Central Chicago time. So probably about this time tomorrow, we'll be seeing easily this level and or more. However, I remain dubious. Again, I'm expecting far more blood and guts. So, you know, be careful out there, guys, because this is not the time to be assuming that you know what the market is going to do, because just when you think you don't know. So let's go ahead and take a look at a couple of other things here. Let's go ahead and take a look at Ethereum real quick, because Ethereum, obviously, that's the one that always holds the most interest for the shitcoin investors. And again, we're on that same plateau. Now, we do have a box set up for that, but again, I'm still calling for these three lows. So this is still very much in the cards, guys. So don't go stepping out thinking that you're going to grab the bottom, because I'm telling you right now, I do not feel like the bottom is in just yet. And of course, obviously, we will be discussing XRP here just in a little bit too. So XRP, however, a little bit different situation. I've been kind of forecasting to you guys that XRP is going to break from the pack, and we most certainly have seen that. However, we have not realized the up call on this. 80% up likelihood, but I'm saying again, don't go getting too big for your britches and thinking that you can just go ahead and look at the chart and figure things out, because there's a 15 to 20% odds that they could go ahead and rug pull us. We've made it, as we oftentimes do, we've made it to the 50% of prediction, and then they'll just throw an algorithm switch up on us and drop it straight into the pit of hell. So we have to break out of this channel for me to feel good about the fact that we're going to achieve this. So what you're really watching for is you're watching for that AI line right there at $1.06, which is a critical make or break zone for XRP. If we don't make that, and we bounce back down off the channel, or we start going down, this is all hope is lost, at least for now on that. So the other thing that I've told some of the guys in my platinum and gold is I see something here that looks very familiar. Now, of course, obviously we got one of those right there, but that doesn't mean anything. We could just as easily go Bart on this, and that's definitely not what you want to see. However, we'll watch, we'll wait. So if you're holding, I wouldn't advise that anybody, I have to use the word advise very cautiously, but I wouldn't advise that people go diving full bore into this, hoping to catch balloons as they rise, because I do firmly believe that we're going to see a little bit more of a pullback to at least the bottom of this channel. So by probably tonight when Asia comes online. So enough of that. We'll go ahead. We might, if there's a little bit of time at the end of the show, we might go ahead and run a few charts. I might go ahead and do a full-on live stream tonight to see. This depends upon how much time we got left in the interview. So let's go ahead, and with that, let's get on to tonight's interview. So on the phone with me, I have our resident tech expert, our resident ICO expert, Red Bear. How you doing, Red?
I'm doing good. How are you guys doing tonight?
Good. So, what are we going to talk about tonight?
We're going to talk about liquidity pools.
Excellent.
At least take a large overview of the entire space and try to break it down for you guys so you can understand what's going on.
All right. Hang on just a second. I want to check some levels before we really get rolling here. I want to make sure everybody can hear well enough and stuff like that. So if you guys are on, let me know that you can hear him fine, that you can hear me fine. Now, I'm running with new equipment. I've got a new XLR mic here, and I'm just playing with it, and my levels seem to be fine. His levels seem to be okay. We do have a little bit quicker decay on the sound here. Hopefully it's a little bit warmer sound, so we'll be tweaking on this a little bit. But go ahead and give me a 5-5 if you guys can hear me okay, and if you can hear Red Bear okay.
Interesting. Mr. Libertad says I'm loud and you're quiet.
Really? Okay, well, maybe. Let's go ahead and do this. And it has to do with how close I am to the mic. I mean, I'm going to have to kind of adjust this stuff here. I've got him right on top of the mic, so how's that doing? A little bit better? How's that sound? Good? Flemish, can you give me a... Go ahead, Bear. Go ahead and do a mic test.
Testing. 1, 2, 1, 2. Can you guys hear me all right?
And testing on my side. So how we sound comparatively speaking. I'm trying to get this dialed in to the point where he's not too loud, I'm not too loud. So it's one of those deals where you got to have your mouth, like, this is why I don't like XLR mics, is because you have to have your mouth, like, right on top of the mic in order to get...
Okay. All right. Well, it seems like they're saying it's pretty good, so I think probably can just go.
All right, go ahead.
All right. So we're going to be talking about liquidity pools tonight, how they match into the space, and how you can actually make a little bit of money off of it while also understanding the risks to go along with that. So with a liquidity pool, I'm sure most of you have used it even if you didn't know you were using it. Whenever you're dealing with anything in the DeFi space, especially Uniswap, you're dealing with a liquidity pool. So how that works is, if you want to switch over to the diagram here, I'll draw some pictures out for you. How it works is that you have a token pair. For example, you have, let's say, ETH and BTC. You have the ETH BTC token pair. So there's a certain amount of tokens in the space. So you have 100% of the pie, right? So this is your token pair. You have BTC and you have ETH. Now, as a person who's provided liquidity into the space, so we'll say we have 1 BTC and then you'll have like 20 ETH. So as a person who's provided liquidity into the space, you've signed onto a contract by doing your smart contract through posting it into this liquidity pool. So what happens is you'll take your BTC and you'll take your ETH and you'll do a contract, and that contract will take it out of your wallet and put it into a tradable pool. And what you'll get out of that is you'll get these things called LP tokens, which is basically like a placeholder for these tokens you have in this liquidity pool. Now, these LP tokens are a percentage of the pool. They're not based on like a market cap, like you're used to thinking of, like you have a limited supply. It's unlimited in terms of the total supply.
Let me
However,
back you up just a little bit here before you get
Sure.
too far down the road. Might help to explain to the guys that are really, really new to this what entails a contract. I mean, when I come from the real estate background, so when you say contract, I'm picturing sitting in an attorney signing, reams and reams of paper. So define what a contract is, how it's created, and how it's applied. And that will be an understanding. And second to that, it would help if you probably explain the risk involved in basically when you're bringing your BTC to a liquidity pool. How risky is that? Those questions are something that I hear an awful lot.
So it can actually be very risky or not very risky. It really depends on the tokens that you're putting in. So, for instance, this is why I said BTC and ETH. That's probably one of the least risky token pairs you can have, because BTC is pretty stable in terms of price for the most part. We haven't seen that lately, but for the most part, it's pretty stable. And ETH is also very stable. So what you're dealing with here is you're actually protecting yourself against something that's called impermanent loss. And permanent loss is the major risk in the space. It's also extremely complicated, and it's going to make you guys' eyes roll back a little bit if I get too much into it. But I'll just tell you this: it's most simplified down to this way. If the price of BTC or ETH moves too much in relationship to the price of each other, you can end up losing money, more than the actual value of the token loss, because of the nature of people taking their money out of the liquidity pool.
So there could be the similarity to a run on the bank. All that would take is, Elon Musk or somebody, dropping a lot of FUD on the market, and people could be taking their exit in groves, and you could be left holding the bag. So that gets into the risk and reward thing. There's no free lunch, folks. Sorry to tell you that.
Yep. So that's why a lot of people like staking, because staking has very little risk. Basically your only risk is if you can't time the market well, because the staking window doesn't let you get it out fast enough. Mm-hmm. When it comes to liquidity pools, what you're doing actually is you're making your incentive to do this is that you get a total percentage of the fees. So in this case, if you're using Uniswap 1, and you have liquidity pool here, so you know how there's 3 levels of Uniswap now? There's Uniswap D1, D2, and D3.
Yep.
How they changed between 1 and 2 is actually the fee that you get for staking your things into the pool. So right now, for Uniswap 1, you get 0.03% of all trades with this pair. So if anyone does a BTC to ETH trade, you get this part of the pot. And if you have a lot of liquidity in a pool, for instance on Uniswap, there's huge liquidity, you get pretty good returns. But
is this one of these things where if you have the lion's share, you get the most, or is this on a straight pro rata basis? Meaning, if you put in $1, if a guy puts in like $100, he gets for lack of a better description, he gets 100%, or he gets 100 shares of a percentage of a thing, or is it like if you're a person that comes in and owns the space, in other words, you have 90% of the pool is yours, then basically everybody that comes in after you, is it a pyramid type arrangement, or is it an equilateral arrangement?
It's a pyramid. So if you own the majority of the pool, then you get the majority of this 0.03 fee.
Okay.
So, yep. So that incentivizes people with larger positions to put more in, obviously. The risk, though, is that if someone starts to pull out, and then you end up with a smaller bag at the end of it, you pull out, the total amount you pull out might be smaller than the amount you put in. So it is a risk. And this is a problem that needs to be solved in the greater crypto space, because the greater crypto space doesn't have a real 100% solution for this right now. There's solutions out there that are trying to work, but so far I haven't seen anything that's 100% in terms of actually creating a stable liquidity pool situation.
If you were to describe, if you were to assign a number of risk, and I'm asking you to paint with a very large brush, I understand that, but if you were to assign a risk number of how many times things kind of just go south and take the cash, and what percentage of risk would you broadly say exists right now? in 2021?
Well, it's pretty high. It's high. It's high enough to the point where I don't really mess with liquidity pool stuff unless it's a tried and true project. Like SLM is a good example. It's been around for a while. It's really one of the better options for doing liquidity pool stuff. I would probably be comfortable doing liquidity pooling. Excuse me. Liquidity pooling on Flamingo, but me and Tiger back during earlier this spring, we were doing a lot of liquidity pool stuff, and we were getting dumped on constantly. And that's why I say dumped on. What you got to understand is that what happens is you'll buy into a token project, these things called farm tokens, basically, and you create these liquidity pools, and they'll pay you in the native token, and they'll pay you ridiculous APR. Like you're talking like 3,000%, 45,000%, or like not 45,000, but 4,500. You know, talking about ridiculous returns. But the problem is that people will dump on you, and then you'll be left holding an empty bag. You know, you might have been getting 4,000 of something that was worth $30, but now it's worth $3. So, you know, it doesn't really help out very much. And that's the biggest risk when it comes to liquidity pool, yield farming and farming tokens, is that I have yet to see a project that has not gotten rug pulled right in the beginning. It's very dangerous.
It truly is the Wild West, isn't it? It truly is the Wild West.
Exactly. It's about being the guy doing the dumping, not about being the guy getting dumped on.
Yeah, greater fool investment. That's pretty much what it is. You know, in my assessment of this situation, and not advice, but you can obviously see the advice in it. If you're doing anything like this, don't use cash. Don't use your real money. I mean, if you're profitable. For example, we've had a couple of our platinum subscribers that have done very well with their calls this week, and they're looking at 300, 400% returns. Now, if you're looking at the kind of returns, potential returns that you're talking about, then does it not make more sense to double down and use your profits? In other words, play with house money for something like this, because, you know, que sera, sera, whatever will be, will be. You know, if you lose it, you lose it. Feels it burns a hell of a lot less to lose phantom cash or free money than it does to, you know, the stuff that you put in the 9-to-5 work, does it not?
Exactly. And I mean, and this is all you gotta realize, that all this stuff is about more speculative stuff, like the yield farming tokens, all that kind of stuff. That's the speculative side. So just like you have altcoins and speculative investments, you still have the blue chips, right?
Yep.
So that applies to yield farming as well. You're going to have speculative yield farming, and then you're going to have more stable yield farming. And that's why I brought up the most stable, which is BTC ETH. That's the most stable you can get in terms of yield farming. It's the least risk. And if you're holding ETH, then it's, you know, it's just sitting there. You can't stake it.
What is that paying on a percentage? Obviously, the safer they are, the less the yield on them. What is, for comparison purposes, what is that paying right now?
BTC ETH, well, it depends on who you're staking with. Every single different contract, what I was talking about up here earlier, has different rewards, different risks, and that's part of the problem too. Is that I was talking to Tiger about this earlier. If you're not versed in reading code, it's not going to be super easy to be able to figure out these contracts unless they have a description page. Description pages are available.
That brings me back to this. Circle back around and explain a contract to those that are kind of wanting to erase your screen there, so we can give me erase your screen so I can make sure that I've got an upgraded screen there. There you go. Okay. The old whiteboard. There you go. Okay. Walk us through a contract. Sure. We're going to hear that term. We're going to hear that term contract. It's going to be a natural thing. It's going to be just a part of life. Even if you're not in the business world, you're going to have to understand what a contract is, because so much of our reality moving forward from 2021 forward, we're going to be living in an environment where everything you do is going to be tokenized, and in so doing, these contracts are going to make and break and rule our lives. So to understand these things is critically important for everybody that's listening to this show. So go ahead.
Okay. So a token contract, in terms of the liquidity pool thing, it's basically you have an A and B token. Now you put those tokens into what they call a smart contract. That smart contract, what it does is it manages the money automatically based on certain data that comes into it. Now this is a very high-level thing. It's going to be applicable to a lot of different scenarios. This one, I'm trying to tailor this one specifically to liquidity pools, but it'll be applicable to, sending money, doing trades, all this kind of stuff. The idea is that basically you have something that is not based on third-party risk. That's what a smart contract is. That's the biggest benefit to it, is that you have two people that enter into a neutral contract with a computer managing certain triggers. So in this case, for liquidity pool, you have an A and B token, and they're placed into a contract. And that contract now is out of your control unless you take this contract gave you, which was liquidity pool tokens, and then you use them to basically unlock your contract. So your contract is kind of like, let's see here.
Here would be the question that I would want to interject early before you go too far down that road. Who authors the terms of the contract? Is it a third party that creates, say for example, it'd be like, all right, well this is a contract and party A and party B enter. So the contract is almost like a neutral third party, for lack of a better description, lawyer that puts this together, or programmer or company or whatever. Would that be a proper assessment of this?
Yep. So it's you're right, exactly. It's like being a programmer and a lawyer combined, except without, as his domain was saying, without the weasel words, because they literally have to write out exactly what's going to happen. There's not any nuance they can do. It's just literally, if this, then that. So with smart contracts for liquidity pools, what you're dealing with here is how to manage someone else's tokens and allow them to be traded in and out of this larger token pool, this larger token pool that you've now submitted your tokens to through the smart contract. So all of this is given over to the larger liquidity pool. And a liquidity pool is you and thousands of other people all putting your tokens together, and then what happens is that you get 0.03% of all trades that happen in that liquidity pool. That's where the money's at, but as we were talking about earlier, there's risks involved. And the smart contract, what it can do is it can basically take your liquidity pool tokens here and give you a percentage of the total value locked inside. So your liquidity pool tokens, this is what you guys need to know. The liquidity pool tokens are actually minted and burned as you take in and out your tokens out of the liquidity pool. So when you start off, you get a percentage of the total. That's how it's actually created. You get liquidity pool tokens based on the total percentage of tokens that are available inside the pool. So this is actually kind of difficult to explain, but try to grab your head around this. So you have a 100%. Here, let me erase this. So currently there is a pool, right?
Mm-hmm.
It is got 20 tokens in it of token A and 20 tokens of token B. So inside of this token pool, you put in 2 more tokens. So you go, okay, I'm going to put 2 more tokens into token A and 2 more tokens into token B. So now there's 22 and 22. As a result, it gives you about 600 liquidity pool tokens, right? And this is all based on what the smart contract says, how much it should give you. There's so much nuance to individual tokens contracts that you can't say like there's a one size fits all. Like you're going to get 600, you might get 200 next time. There's 100 for a different pool. So the amount of liquidity pool tokens you get is based on purely the tokenomics of that liquidity pool. There's not really a hard and fast rule for this.
Okay.
That's why it's difficult to explain, because you're talking about something that's nuanced to the point of each individual contract having different rules. So when you have a liquidity pool, you get a sliver of it, right? That's your little sliver right there. You get the 600 tokens. Now, if you want to take your tokens out, you have to burn these, right? So the total amount of tokens in the pool for these liquidity pool tokens is reduced. Well, if somebody wants to dump in, 4, now they get 1,200, right?
Mm-hmm.
They get 1,200 liquidity pool tokens. So they've just minted 1,200, right? So the total supply has actually gone up by 600 of these liquidity pool tokens. Now someone dumps in 6, You see what I'm saying? Like,
right.
What's happening here is that you're getting more and more of these tokens into this space. So just like being an early adopter into a small cap crypto, if you're an early adopter into a liquidity pool, you can actually get well positioned. That's the incentive to put into these pools that are really highly speculative. Because have you ever wondered, like, what would be the purpose of having your highly speculative SHIB token, What would be the point of that? Because you're facing potentially massive amounts of impermanent loss if SHIB loses a ton of value, right?
Yeah.
Okay, well, you own a huge percentage of the total, because everyone else is thinking the same thing. Now you own a huge slice of this total liquidity pool, and you get the amount of tokens that you have is, much larger. Now you have, for this initial, right here, this initial little token that you put in, you put in 5, right? You put in 5 into both token A and token B. Well, now you own, a huge percentage of this overall thing. So the amount of fees that you get of this is way, way, way higher. And as a result, you gain a lot more money. But your risk is, okay, well, the price of SHIB, goes up, it just goes all the way down. And now you've basically, this little amount of fees here. Well, that's not going to cover that. You're broke. So, this is a lot more of a watching kind of thing. If you're going to be getting into staking, or not staking, but putting into the yield pools something like SHIB, yeah, you're going to make a ton of money on the yielding because people are trading in and out of that constantly. But, you're going to get huge impermanent loss, too, if you try to take your tokens out.
Mm-hmm.
And the market is currently turned down. That's why a lot of people will wait until the price comes back up, and then they'll take their tokens out, because then you don't get the impermanent loss and you get all these fees. So the idea is that there's a lot more market timing. There's a lot more nuance. It's not just sell high, sell high, buy low. It's, you have to sell high and also make sure that you're not trying to take your tokens out if there's no liquidity in the pool. It's a much more complicated layer to the traditional trading platforms. But as a result, though, if you can find a coin that can really run up, and then there's good smart contracts and all that kind of stuff, you can make money all the way up, which is pretty nice too.
Mm-hmm.
So, with everything in life, there's risk and there's reward, and sometimes there's bigger risk and sometimes there's bigger reward. But, it's important to make sure that you take everything into account before you put your money anywhere.
Right.
With this kind of thing specifically.
Absolutely. Don't put anything. This is for the time being, probably for easily the next couple of years. And sorry to say, guys, until it gets to be a regulated space, this will always be the Wild West, and the Wild West is a scary place. A lot of bad guys in the space, and so there's always somebody who's a little smarter, a lot faster, willing to take your money, and now it's easier to take someone's money than it ever is, and they don't even realize it's gone most of the time until it's way gone and you're just broke wondering what happens. So, as we constantly say, is don't ever risk more than you can stand. To literally, if you could roll down the window of your car and throw it out the window, then you could probably be comfortable with it. But don't be betting your mortgage money or your rent money or your kids' college money or anything like that, because this is just not the place to do that. Even with our AI powered charts and stuff like that, we always err to the side of cautious and tell everybody, there's plenty of money to be made along the way, but you got to pace yourself, because if you try to go all in on one big bet on black gamble, that's not good. It's not good. And so those stories rarely ever work out the way you want them to. Let me take a little break here real quickly. Let's take a look in on XRP. I was just kind of spot checking that. So we've hit the top of the channel here, and so now we're just hitting the AI line. You guys that understand how our programs work, that we use an automated intelligence predictive programming chart here that is quite unlike anything you'll ever see anywhere else on YouTube. So we hit this and we're pumping. So now we're making break. We're past the AI line. We're right on the pulse marker. We're looking very good. Highly possible we very well could break into this area right here. So the next place we're working at is trying to break this line right there. So here probably by the end of the broadcast, we're either going to be to it or we're rejecting off of this. So the alligator is looking very spread. The RSI, the MACD is looking pretty good. So all things seem to be pointing up here. So we'll see how this goes to about within this area right here. We should probably be up and in and possibly beyond. So my call for the guys that were on last live stream is we're really trying to get to a $1.20. Once we get to a $1.20, we might be able to take a breather and realize we've gained new ground, and if we can 3-candle hold it, we'll be in good shape. So also, I want to mention here while we're at this, if you guys want to join us, please join us at our Discord, which is free. You can join us at the unfairadvantage.chat, and you can, if you have questions, you can approach Red Bear, who is one of our moderators, and you've heard him reference Tiger Histalmos and Words from Our Father, who is also in this chat as a moderator. So we're always here for you guys to help you get the best out of your crypto trading dollars. So once again, you can join us at our free Discord, which is the unfairadvantage.chat. And if you'd like to subscribe to our automated intelligence charts, and eventually once you get to be a part of our Discord and start to see what it is we really do for the rest of the week, you'll be quite impressed and you'll want to subscribe. And this is probably I don't want to say the easiest money you'll ever make, but some of the most secure and some of the most predictable money you will ever make. And you can go ahead and subscribe at fibicharts.com, F-I-B-I charts.com. All right, so back to Bear. So go ahead and pick up with where you left off here.
Okay. Well, I want to get an important thing clear here, though. So, yes, DeFi space is very Wild West, and it's very, how do I say, it's very complicated. Yes, it's very complicated and difficult to understand. But the most important thing you're having to understand here is that the liquidity pool aspect of the DeFi space is 100% necessary to the functioning of the overall DeFi space. In
Absolutely.
fact, it's probably one of the most important things. Because if there's nothing to buy, there's nothing to sell. If there's nothing to sell, there's no money to be made.
Well, absolutely. Any project that even in the quote unquote real world, I mean, until money comes into the space, it's just ideas. So that's the money. You could kind of look at liquidity as being the early investors or the stock buyers. I mean, it's not a direct 1-for-1 comparison. But until someone ponies up the money to go buy the equipment and get the ideas to actually happen, nothing physical happens in the real world until money is injected into any form of business, and this is a business, make no mistake about it.
Exactly. So these liquidity pools are not going away anytime soon because they're necessary. And what we were talking about with the centralized exchanges and how they do their pooling with basically, this is very similar. With DeFi, it's actually a little bit more complicated because what you're having to do is you're having to have token pairs. Instead of a general pool where all the tokens exist, you're having token pairs. So you're talking about, like, this is why you only have certain kinds of trades. For instance, you have, like, ETH to BTC, then BTC to, Ren coin or whatever you're trying to do. That's why you have to go through all these different chains because the tokens aren't connected to each other. They're only connected to each other within the token pair. So that can kind of slow things down, which is why you need layer 2s. You need to have good oracles to make sure the prices are good. You need to have good token pairs. And this is where Uniswap comes in, because Uniswap allows you to vote on new token pairs to expand the space. And it's basically, Uniswap is just a government's token to expand Uniswap over time.
So I got a couple questions that are coming in on the Discord, not on the live chat here. Question from one of our subscribers is who's holding the money? Where is the money, or where are the tokens? It's a good question. Where is the money during? So if you're putting up your money or your tokens, who's holding it? So we've often heard the expression "not your keys, not your crypto." How does that play out in a situation like this?
Well, the token is being held by the smart contract that you initially started. So no one holds it except for the AI that is the one that's in charge of your smart contract. So it's not really about, Uniswap holding it or you holding it. It's literally held in that smart contract that you signed. So, it's an escrow essentially.
Right.
It's in free space. You don't have access to it except through burning those LP tokens that you initially got when you minted your smart contract in the first place.
Mm-hmm.
So it's not really how we normally think of things, where there's somebody who, there's a third party that you can go to, and you can file your complaints if you have an issue. It's really on you in this case. That's why it's important to do your research on what you're signing when you're actually going into a smart contract, and not just assuming that it's all good and all above board, because as Red Bear mentioned, this is the Wild West, and there's a lot of scammers, even in people who are making the cryptocurrencies in the first place can be scammers.
Right. And honestly, as I get to listening to you talk about this, I'm asking myself, how does big business capitalize on this? Because this just seems like something that a Charles Schwab or Vanguard Investments or something like that would just be, oh man, we gotta get us into the liquidity pool game. And as you're currently describing it, there is no third party, which of course would be those folks. Do you see liquidity pools morphing into like old guard type of business, where you basically, if you want to invest in stock right now, you got to go through a Charles Schwab, you got to go through a Robinhood. They got a third party who is basically getting a little cut of that. Do you think there is any way, shape, or form? I'm going to go kind of off on a limb here and get a little conspiratorial, but do you think that there is any way that smart contracts, or I'm sorry, not smart contracts, but liquidity pools could be morphed by law, by design, by construction, that a third party could capitalize upon the facilitating of these contracts? Meaning, if a Chuck Schwab came in and said, hey, listen, we're going to start our own liquidity pool, and of course, obviously, they would be making a percentage off of that for being the originator. Do you think that there's, in the future, that might be the way things go, or do you just think they're just SOL and they're out of luck and they're just going to have to find a new game to play?
I think they could definitely do that because, like I said before, liquidity pools are necessary for the space. So they're going to have to find a way to make that work. And these guys who are sitting on billions of dollars, they're going to be looking to park that somewhere. And they're not also looking to cash out. I mean, like, a lot of these investment firms are not traders, so they're not moving in and out of the market. They're just buying and holding.
No.
They're the original hodlers, and
right.
If you're a billionaire, like, you don't have to worry about, other people shrinking your bag by, doing dumps and stuff, because you are the person who's, you are the market, basically.
You're the market maker,
so,
is the term for that.
Yeah,
yes.
Exactly. So you're talking about, okay, now you have, a liquidity pool of $3 billion and you own $1 billion of it. Nobody's going to dump on you because you own so much of the pool that, the amount of noise in the market is never going to overshadow your position.
There you go. So there you go, folks. You just heard the future right there predicted. I'm telling you right now, that's exactly the way of the future. I know how big money works, and I know that this is exactly the kind of thing that they are going to step themselves into. Through that, they will also, as we all know, anytime something new comes along, the big money comes in, they own the space, they control the space, they manipulate the space to their liking, and then they slam the door behind them to shut out the little guy. So mark my words, within the next 3 to 5 years, certainly a lot faster, as fast as crypto's moving right now, I can very easily, that was kind of an open-ended question I already knew the answer to. So that's exactly what somebody like a Chuck Schwab, or somebody like in those, or even the banks that are currently reinventing themselves, are going to do. They're going to use the power of regulatory confinement to shut out other people. So do not be surprised if regulation kind of comes down super hard on liquidity pools, and the only people left in anything, is going to be the big players, and then they're not going to be paying out squat when that happens. Would be my prediction.
Yeah, that's a great point. It's because the space is so volatile and fluctuative in terms of people pulling in, people pulling out. During this most recent market collapse, we saw a lot of liquidity issues actually on Uniswap specifically, like with this impermanent loss kind of stuff.
Indeed,
because people were taking their money out trying to sell, and then they would pull their money out. Their bags would be smaller than what they thought in. And they were like, I've been staking forever, and this is what I have. A lot of people got burned by that because they didn't understand what they were getting into when they first signed that contract. You do not pull your tokens out of a liquidity pool when you're having a liquidity crisis. It's just you're asking to get burned in that situation. It's just like you sell the bottom of but you're getting double burned because if you pull them out to sell, you're getting the initial burn of the liquidity shortage, and then you're also getting burned on the sell. So you have to be very much in control of your emotions if you're going to be getting into the liquidity pool stuff.
Yeah, it's not a quick turn thing. It's you're in it for the pseudo long haul. How long would you actually say? That's a very good question too. How long would you actually say that most people should stay in a liquidity pool, or is it really on a case by case basis?
Well, it's a case by case basis. It depends on what you're trying to what you're trying to stake. You don't want to be staking something that's got a short lifespan in terms if you're going for a long haul, the liquidity pool. It's really depending on your risk tolerance and your understanding of the markets. Like if you have a 9 to 5 job, it sounds great to be able to make passive income on the side, stuff like that.
Certainly.
But you also have to be willing and able to watch the liquidity of the specific pool you're in, and also the price of the token you're in, and make sure that you're not getting burned on that case. So, for instance, if you're doing like a BTC to ETH combo, you could probably stake that for 5, 6, 7 years, and you'd be making bank because that's not going anywhere.
Right. Right.
And you're gonna get big dumped on too, because in a good way, because these investment firms like you're talking about are gonna be moving into the space just to get the residuals. Talk about dividends. You're talking about dividends on every single trade that you make. It's like, why wouldn't you be making your billions of dollars making money in terms of actually making real huge profits? Because these guys they're not looking to sell out of BTC anytime soon because they know the way the dollar's going. They know the way that the whole economy's going. It's not going good. It's only getting worse. And with the B-man's new $6 trillion bill he's trying to get through Congress, it's like, stick a fork in it. The dollar's done. There's no future there.
So Bitcoin's taking a little bit of a move here, but I'm eyeballing as you're talking. We've hit the target area here, so we're waiting for a couple of candles. So the general market right now is looking somewhat better. So we're looking for Bitcoin. As long as you brought that up, Bitcoin's looking for a run. Quite possibly here. We've got let me go ahead and do a little bit of predictive move. Probably around about that much. I would honestly see us probably hitting right in that area. And what I'm seeing off screen here, the AI bots are kind of saying, yeah, I think this is pretty much tonight. What's for dinner tonight, so to speak. That's good. We're basically we're kind of breaking out of something into, I wouldn't exactly call that a cup, but we'll see how this plays out here probably by the end of the stream. Now, we might be doing a whole live stream with our normal, regularly scheduled program where we do chart runs and stuff like that after this show. We'll see what kind of time we got left, but just want to check in here. So you guys that are watching this, I'm monitoring the charts and stuff as Bear is talking here because I want to see if there's anything going on that the guys that are in gold and platinum and subscribers want to know about. So they're on stream because they want to watch their investments at the same time they want to learn some new stuff. So I'm kind of doing dual focus right now here. So all right, go ahead. Sorry.
Okay. Yeah. So like we were saying, it's like the liquidity pools are going to be a thing to stay, and they haven't really been flushed out completely yet in terms of like what you have for oracles with the Chainlink and layer ones with the myriad of layer ones they have in the layer 2s is others taking off. Like the liquidity pool problem hasn't been fixed in a way that other tokens have. And I think that has a lot to do with the fact that, yeah, like you're saying, there's no regulations for that yet. This is one of the areas that I actually would welcome regulations, is in the liquidity pool stuff, like limiting people being able to take funds out. That would be a good way of doing it. You could write that into the smart contract, of course, but then people get, they get a little skittish about it because now they're limited to how much they can take out in a given time. There's pluses and minuses to everything. Right. But in terms of actually having some kind of regulatory framework around liquidity pools, and that is going to make that area a lot more stable and a lot better for everyone, in my opinion. And this is coming from a guy who generally doesn't trust the government at all.
Honestly, the first thing, and my mind automatically, I've been an investor for darn near 30 years, dealt multiple millions of dollars in real estate. I've rubbed in, two of my best friends are very highly placed bankers in the top 5 banks. So I hear how these guys move and think, and so I can kind of anticipate their next move. And one other thing that comes to my mind here, we're looking at, some of these percentages that you're claiming for liquidity pools. When they're good, they're good. When they're bad, they're bad. Generally, what we see in the here and the now with investments, such as these IPOs that come out and stuff like that, it always seems like the rich guys get the best pickings, and then the crap or the leftover stuff or the not so good yielding stuff is left for the unwashed masses. One thing that comes to my mind immediately, and it's more than a hunch, it's really an understanding of the way things work, is I believe highly that this will be regulated. Without question, I would probably put a 95% likelihood on it, if not higher. But the other thing that we don't want to see happen, that I can honestly see, it might be broken down on a case-by-case basis, but still not good, is I can see this becoming something that is only available to qualified investors. That would be the death of the average investor to get into liquidity pools. So if you guys don't understand what a qualified investor is, go ahead and look up what the terms are involving in that, meaning basically to kind of just break it down for the guys that don't understand. You have to have a certain net amount of cash. You have to be able to prove that you got money so that you can go make more money. So if I'm, Joe Lunchbucket working 9 to 5 at a convenience store or something like that, and I hear about this liquidity pool in the future after regulation has come down, and I go, hey, boy, I'd really like to get in there and get me some of that, 10,000% return or some ridiculous thing like that. I could see that, these high yielding, safe, AAA type deals are, but you're not a qualified investor, so you're too stupid for your own good. We can't let you in. Meanwhile, here we got this kind of bread and butter. You got to own it for 50 years to get any decent kind of return out of it type of thing. You can buy all that all you want. That's what I'm expecting to happen, because I know human nature and I know bankers' nature. Mark, that you heard that here first, because that is the way that the bankers play the game. When they do come to the space, they will own it, they will control it, they will modify it, they'll pull it all back, they'll keep the good stuff for themselves, and they'll throw table crumbs out for the rest of us. And that's, we don't want to encourage anyone to go jumping whole hog into this. But there is a window, and I will tell you, as someone who is really good at forecasting the future, the window is closing for the common man on this. It'll get better a little bit, but as far as we will see all things like staking, we will see all things like liquidity pools, payouts, and stuff like that. All profits will be coming down. All ICOs, all these wild returns that we're seeing of 20, 25, 30, 50% per day, the window is closing rapidly, folks, for being able to get stuff like that. So you've really got a certain number of months or a couple years left in the space before it just becomes business as usual. Would you agree?
Yep. Exactly. There's nothing really more you can say to that, because what you're dealing with here is people who are market makers. They don't play by our rules, and
Correct.
They have control of the pocketbooks of Congress on top of that. So what you're seeing is going to be basically a shakeout of people who are thinking they're going to make big money off of passive income for liquidity pools, because they don't really want the competition, and they're going to have so much of the market share in terms of actual ownership. We talk about in DeFi distributed finance, but re-centralized. It's just how these people go, They're gonna come in with their billions and trillions of dollars, and right now the DeFi space is so small that they could easily just buy up most of it.
Well, absolutely, it's a
estate.
new game, but it's the same players. Once they have spent time to really study the game board, make no mistake about it, they'll crush everybody right out of it. That's just human nature. And really, it's been that way since the dawn of time.
Yep, and they can set up their own liquidity pools too. They don't even have to use the Uniswap liquidity pool if they didn't want to. They could basically provide liquidity to Uniswap through their own liquidity pool smart contracts they would set up, and no one else has access to.
Now
and then they could charge whatever fees they want as long as Uniswap will take those liquidity. If they have the majority of liquidity, then they can set the rules as they want.
Right. Basically. I got a question that came in through Discord here. Let me see if I can read this correctly. I'm going to have to paraphrase this. Basically, is Ethereum the only swap coin, or can this be done with literally any coin? Does Ethereum have to play a part in this? I think what motivates that question is the fact that we're watching the price of Ethereum. It got a little bit spooky there for a while, and it had the pullback that I predicted. But I think the concern in that question is should I be loading up on Ethereum if I want to be involved in this, or is there other opportunities that do not involve Ethereum?
I mean, loading up on Ethereum is always a good idea because
Absolutely.
Ethereum is definitely going to be going well. But in terms of, you can do liquidity pair staking with any token pair. It's the issue is are people going to want to use that token pair to actually do the trades? Mm-hmm. So that's why ETH is a good one because everybody's got ETH. It's on these exchanges, the centralized exchanges, there's always an ETH pair with something. It's just like a BTC pair.
Right.
So if the total percentage of the volume of trades, it's going to be higher if you have an ETH pair. So you're going to get more return because there's more trading in that token pair. That's why ETH is a good liquidity pool token pair to have. So you can have ADA to ETH if you're using because you can wrap these tokens. So for instance, ADA is on its own mainnet, but you can wrap it in the Binance Smart Chain token.
There's another term before you get too far down the road. Explain wrapping. You got to kind of step back in your terms a little bit and remember not everybody's at your level. So you got to define your terms a little bit. So define wrapping because that is something we've heard an awful lot recently as well.
Yep. So wrapping is when you send a token like ADA, for instance, to another chain, and then it's what we talked about earlier with the smart token, smart contract stuff.
Why don't you sketch that out so everybody can kind of understand what we're talking about here?
So here we go. ADA. So ADA is its own mainnet. So it's got its own tokens and all this kind of stuff. So what will happen is that you're going to want to get it onto another token that has a swap associated with it. So we're going to use PancakeSwap as an example. So PancakeSwap runs on the Binance Smart Chain token platform. So Binance Smart Chain is basically the gas for Binance Smart Chain is BNB, as most people have probably used. There's actually two token chains associated with this. There's the Binance Smart Chain and there's the BNB chain. But that's a little more complicated than we need to get into right now. So what happens is that you're going to take your ADA here and you're going to send it to the Binance Smart Chain. And the Binance Smart Chain then is going to be in charge of that ADA token. Just like what happens with the liquidity pool. If you want to take it out, you have to get it to send it back onto the ADA chain. Well, it never really leaves the ADA chain, but it leaves your ability to do anything with it because now the Binance Smart Chain is actually managing it for you. So if you want to get, for instance, if you want to send it back to the Binance Smart Chain, you're going to have to, or I should say, if you want to send it from ADA to another ADA wallet, first you have to send it off of the Binance Smart Chain back to ADA. And then from there you can go from ADA to another ADA wallet. But the idea is that the Binance Smart Chain now is handling your tokens. So now you can do a token pair for instance, you can do ADA and you can do BNB. So you can do an ADA BNB token pair and then do liquidity pool staking with that on the Binance Smart Chain. So yeah, it looks really, really complicated and all, but it actually is not really that complicated in terms of how you actually manage this kind of situation, because all you're really doing is you're taking ADA, you're saying, I'm going to wrap it, you're going to send it to BSC. It's still available to you, but it's just on BSC now. And then you take that BSC ADA, they may call it like something like little b. Well, you'll see a lot with this with wrapping tokens. They'll have like a little b in front of it, or like a little n, for instance, for the NEO network.
Mm-hmm.
And that just says it's wrapped. That's all that means. Like they have wrapped BTC. It's the same kind of thing. Wrapped BTC is on the Ethereum blockchain, but the point is that it's a subcategory of the initial token. So now you have BADA. And BADA, you can do a token pair, and then you can get all of the fees associated with BADA and ETH, and then you get the trading pair. And that's how you can do swapping on DeFi exchanges with non-traditional tokens. So it's not like a Binance sub-token like I think those are called like BEP20s, BEP20s. Like that's like an ERC20. So it's like it's not on-chain, it's off-chain in terms of having its own mainnet, but it's on-chain in the sense that it's wrapped. So it still functions like a BEP20, but it's a placeholder for the ADA. Basically, that's all you need to know. And it's pretty simple when you actually grasp that finally, because you're not dealing with super complicated, throwing things all around like it seems.
Mm-hmm.
All you're really doing is trading ADA. You're just trading ADA on a different, and this is how you're going to get interoperability in the future. Is you're going to get a bunch of this kind of wrapping capabilities. You probably have auto wrappers, so you don't even need to go through the process of wrapping it, because right now you have to manually wrap stuff.
Right.
But in the future, there'll probably be auto wrapping. You're just going to go, I want ADA. I'm going to send it to the Binance Smart Chain because I want to do some token pair or token swapping or something. It's
Well,
go through the
yeah,
process,
most certainly.
all handled on back.
I'm having that thought because as I look at this, I'm thinking the average person, their eyes would just glaze over at the idea of half of what you just said there. Really, we're still at the 1% of adaption here, or darn close to it, where so many of people have heard of this thing called Bitcoin. This is so far down the road. Beyond that, you're speaking alienese right now. So absolutely, there's going to have to be things that put a pretty interface in front of this, because this stuff cannot be trusted to the average person. For example, reading Zachary knows. Are you glazing over there? Wake up. But that's kind of why Coinbase could kind of go off topic a little bit. That's why Coinbase does so well, because it takes all the scary stuff out of buying and selling crypto. It puts a friendly little interface on it, and that's what's going to be so necessary in stuff like this. So there's going to be a lot of little side business that goes in, a lot of little side programs like the wrapping and the management and stuff like that. We eventually are going to get down to a point where basically you just get on the phone. What do you want to do? Well, you probably don't even touch your keyboard at that point in time. You just tell your phone what you want to do, and it just does it, and it'll go to the proper place and do the proper thing. But you are 100% right. There is going to have to be something that does this for you, full boat. At some point in time.
Well, that actually brings up a very interesting idea that I just had because of what you just said. They have AI right now. You have AGI. It's called artificial general intelligence. It's a token. Think about this. It's a token on the space. It's an AI. Why not be able to talk to your phone and just say, "Hey, buy me this," and then the AI.
Well, it's
AI
coming.
Token that you
it's
have
coming. Unquestionably, it's
you.
coming.
I
mean, anyone that doesn't see the end game, they're obviously not paying attention. They haven't watched enough sci-fi shows. I mean, we have test grade level stuff right now currently that is doing exactly that. So in the next 2 to 3 years, I mean, it'll be. I was musing to myself on a kind of an off topic but semi-related type thing. I was musing to myself how long ago it's been since I've touched cash. I've touched cash 3 times this year. I literally live off of my credit card. I'm a child of the 1980s. I was in my early teens, 12, 13, 14 in the 1980s. And, credit cards were not really something people used. And then just all of a sudden, and now it's really you can pretty much go anywhere, do anything. I only touched cash 3 times because going down south, I had to get on a toll road, and I needed a couple coins in my pocket to go ahead and cover the toll. But actually, you really don't, because you can just pay with your card right there too if you want to. We can exist pretty much without touching cash at all anymore. And think of how fast credit cards got adopted, and they're just ubiquitous. And I can also muse to myself is I remember, whoops, excuse me, my phone's trying to pick up a. Did I drop your call?
Yep.
Okay, sorry about that. Yeah, technology problem there. Sorry, guys. I'm also mused to myself in the fact that I remember everybody had a landline. Now I was talking to Bear, and he was joking. He goes, "I'm a millennial. I don't have a landline." You remember? We were talking about that. Landline. Way back in the 1990s when I got my first phone, I knew there was going to come a point in time when landlines just really are not even a thing anymore. So it's amazing how fast we adopt things, and they just become normal. So the more, I always like to say, the more stupid they can take out of a project, the quicker it can be adopted. So the sooner you can put all this stuff behind automation and cover it up with a pretty interface, the faster it'll become ubiquitous. Would you agree?
Yep, exactly. Mm-hmm. Yeah, I mean, especially with this stuff now, it seems like rocket science, but we're really just on the cutting edge here. So it's the least refined for the average user. It's like when you were first talking about coding back in the early days. It's like having to interact with the computer was basically having to be a coder. It was the same thing. You had to use command line prompts and all this kind of stuff.
Oh yeah, just get on the internet. Yeah, it was hilarious.
Yep. So what we're doing here right now is basically we're building out the skeletal system of the entire financial system, and yeah. you're having to, make your own wheels, and you're having to do all this stuff by hand that normally is in a few years is going to be all automated, and you're not even going to think about it. It's just going to happen. And I mean, you're going to think about it, but then the AI might read your mind, that kind of thing. It's like,
I was going to say, you're probably being a little more prophetic than you think. You're going to think about it. Next thing you know, you got a bill for something you didn't even want.
Exactly.
Amazon's dropping crap at your door you didn't even think you really wanted. Yeah.
Yep. Exactly. And it's just it's complicated in the sense right now, but you're going to get it over time. And this kind of stuff is really just going to grow and grow. And one day you're going to wake up and you're going to be talking about BEP 20s and ERC 20s and TNT 20s. And you're going to be talking about all the different types of layer 1 sub protocols that exist out there.
Yeah.
Sub protocols as in ERC 20s and that kind of stuff. It's going to be. You're going to be like a pro, and people are going to be looking at you like some kind of savants, because most people are still going to be getting on the BTC bandwagon.
Well, yeah, because it's kind of like when it does go full adoption, it'll be kind of the same way as me trying to talk about. I remember the day of rotary phones. You're like, rotary phones? You mean those old timey things with yeah. I remember black and white television, rotary phones. I mean, I'm 53 years old, and it's like we're going to be the old school battle scarred guys that used to have to go and swap 50 friggin' things and buy one coin for another thing, and all that stuff's going to be completely automated for you. You're going to have quote unquote credits, and be that whatever, BTC will be, there right now the argument is BTC is going to be the store of wealth. Okay, fine, if that's what you want to say. Ethereum will handle the legal side of things, because Ethereum's definitely going to. I've heard the advanced theory that basically Ethereum's going to replace lawyers. Don't bet on it, but until marriage contracts start getting tokenized, and I don't know, maybe they will be. I don't know, but there's always going to be.
They probably will. To be honest.
They probably will. I say that with a kind of a sick humor, but it's do you take this token to be your lawfully wedded, husband or wife? It's probably, that's probably a little bit more spooky and a little bit more prophetic than we probably want to be on such a lighthearted broadcast. But the truth of the matter is, it's about exactly where we're headed. Now, is there any question that birth contracts will be tokenized? Is there any question that, the entity structuring, such as corporations, will be? Certainly. So why wouldn't it be? But yeah, it's everything. Everything will be handled behind the green curtains, so to speak. They'll just be pretty interfaces, and everything is just, what do you want to do? Okay, it's done. Don't worry about how the gears turn or how the machine works. What you want just got done. There you go.
Yep, that's it exactly. All right, I gotta run real quick. I gotta go to the bathroom. I'll be right back. All right.
Okay. All right, guys. So while we have a little bit of a break in the Discord here, let's go ahead and let's take a look at the market and see how the prediction's working. Well, lo and behold, the AI has brought us exactly as predicted, right into the box. So, looking a little bit bull flag-ish, if I dare say so. We've got kind of a nice little natural run up here. There's nothing bot oriented about that. I think we'll go ahead and we'll probably tag this prediction really, really soon. I don't see any reason to doubt that that'll probably happen by the end of this broadcast. Now, for those of you guys that are new to our live stream and never seen and understand how I can talk with such conviction about us making these things, is because these things are automated intelligence driven. These lines here are not Fibonacci lines. These lines going up and down and side to side are part of what we call the unfair advantage grid. So basically what this is these are two programs, AI-driven programs, that track and predict the movement of all different cryptos. And if you guys are subscribed to our charts, let me jump over to the right thing here in just a second. If you guys are subscribed to our charts, we track over 100 different coins, and we're going to be getting into a lot more here just soon enough. But you can join our Discord for free. We'd love to have you as part of that. The unfairadvantage.chat. The unfairadvantage.chat. You're more than welcome to go ahead and join that. We'd love to have you part of that. There's no cost, no charge. All right. So you back? Let's go ahead and put you back on here.
I'm back.
All right. Go ahead. It's all you.
All right. So we've gone over a lot about liquidity pools today, and I don't want to make you guys have your eyes glaze over, because liquidity pools are very complicated and they're very confusing. So we can talk about let's bring it back to something way more simple. And this is going to be a little bit off topic, but just gives you an idea of something that you guys can work with here. So everybody knows about ERC20s, right? Yep. Everybody knows about BEP20s, or maybe not everybody, but BEP20s is the Binance one. So each one of these tokens actually has sub-tokens on it, right? Just like anything, you can deal with on-chain tokens, right? Just like anything else, like ERC20s. So you got ERC20s, you got BEP20s, you have, I think ZIL has one. I think it's Zero, or it's like ZRC20 or something like that.
I think it's ZRC20. It's been a while, but I believe that's what it is.
So this is how you have on-chain trading, basically. Is these tokens, ERC20s, BEP20s, that's really where you're doing most of your trading in terms of actually doing these DeFi swaps. This is where you're going to see most of the development in terms of cross-chain stuff. It's going to be through these BEPs, through these ERCs, through these ZRCs, all this kind of stuff. Because what you're going to do is you're going to end up getting everything is going to be wrapped up. Everything is going to be wrapped. Everything is going to be being sent from one layer one to the other layer one, and it's going to be competition based on gas fees, basically. This is why ERC is probably going to be giving some of its market dominance in terms of the programmable smart contract space over to new layer ones. I see a lot of layer ones taking off as a result of that, because people are just going to be able to easily wrap through auto wrappers. You're going to be able to wrap your ERC20, you're going to be able to do it to BP20, you're going to be able to do a token trade on the BP20, and then you're going to be able to go over to the ZRC20, and you're going to be able to do these crazy trades, especially with platforms like 1inch. You're going to be able to go and do layer one to layer one to layer one trade, and you're going to be able to go to Matic, and Matic is probably going to be integrated with that. It's probably going to be integrated with Binance as well, and you're going to be able to go from Matic directly to these other chains. Like you're going to go from Matic instead of having to go through ERC to be Ethereum, you're going to be able to go from Matic just to straight to Zil. And that's just, it's going to be a crazy ecosystem. And I say ecosystem in the sense that it's going to be like an ecosystem. You're going to have plants, you're going to have trees, you're going to have animals, you're going to have all this kind of stuff. And they're all going to be interdependent on each other and interrelated in such a way that it's like an organic, living, breathing ecosystem.
Mm-hmm.
And there's going to be healthy parts. Some things are going to get diseases. Like you're going to get some things get hacked. Like if Matic gets hacked, you're going to have a massive shutdown of the system.
Right.
But like the system is going to adapt and grow around things. So if for instance, if finance has problems with its ability to be stable, well, what will happen is they'll either get some help from a third-party token that'll be developed to actually band-aid the solution, or they'll just get cut out of the system, and you'll just get new tokens. I'm on more of the sense that there's not going to be a lot of cutting out in this initial phase because we're still so new, we're still so growth-focused. We're going to have a lot more new token solutions, which is going to happen, I think. And Matic is an example of a new token solution to solve the ERC20 problem, right? And that's just how things are going to go. It's just going to be constantly learning and having to stay updated on the space because it's going to be so dynamic in terms of changing solutions from all of the different layer 1s to all the different layer 2s, and with the oracles involved and everything else. It's going to be incredibly fascinating to see how this organic process goes. And then when the regulations come in, and then the big money comes in too, you're going to see the space have to develop and adapt to that too, because they're going to be forcing, a lot of power around. They're not just going to let the system develop organically when they're involved. They're going to be trying to get certain positions.
Oh, no kidding. Yeah, no kidding.
Rules. Yeah.
A lot of this stuff is basically already been planned, much like the market. Like I've taught you guys on the market, is they already know where they want at every point in the game on this market. It's just a matter of just navigating between point A, point B, C, D. They know where the end game is for this. Some of this might be a punch list, a wish list of stuff that they want, and they need the technology to catch up. But on the stuff that they have the ability to do, they're making moves towards an end goal. So the end goal has long been figured out years and years and years ago. So it's just simply a matter of fleshing out the go between.
Yep, exactly. So yeah, that's pretty much all I can really say about liquidity pools and stuff today.
Okay.
Like I said, I don't really want to give people too much information. They'll get overload and they won't remember anything. But yeah, it's just the idea is that liquidity pools are a necessary part of the space. They're not going anywhere anytime soon. There's risk and rewards, and just do your research. Do your due diligence. Make sure you're not getting involved in something that you don't understand.
Okay.
That's all I can really say about that.
So on next live stream next Monday, we will be doing this again next Monday. So on next live stream, why don't we talk a little bit about staking? Give us a breakdown on staking and how that compares, a comparative analysis perhaps between staking and liquidity pools. Just as a preview of that, that would be a much saner, safer way to handle your money. Would you not agree?
I 100% agree. I prefer staking most of the time to yield farming because of it's still in your possession for the most part, unless you're doing other things. But the risk is so low that you're basically just making money. It's like getting dividends from stocks.
That would be a good assessment. Yes.
You're just being paid to hold it.
Right.
Yeah.
Okay. All right, well, we'll go ahead and we'll cover that on Monday next. And for now, we're going to go ahead and sign off. I certainly do appreciate you guys taking the time to listen to us kind of prattle on a little bit. So my name is Red Baron for Red Bear. We are at theunfairadvantage.chat. If you'd like to speak with us, you'd like to join our group, we'd love to have you be a part of what we're doing. And if you'd like to subscribe to our charts, we'll go ahead and we'll take one last look at our market, which seems to be holding ground right inside of our triangle, and Bitcoin is still rocketing towards our prediction here. So we will be right back on our regularly scheduled predictive broadcast this coming Wednesday. We do this on Monday, Wednesday, and Friday when I've got nothing better to do. I was out racing today, enjoying this nice thing. So you guys wanted to ask me how I was doing on racing today. I went out racing with Crypto Rich, and he put I talk young crypto rich is one of our platinum level. He's now a diamond level subscriber. He's made $10.2 million in Doge using our predictive AI charts, and so he bought himself a nice little hoopty GT4 Porsche Carrera. And he doesn't know how to drive it. So I took him out and taught him how to drift today. I taught him out how to race, how to drift the car, and he put it sideways into a curb basically, and bent a $4,200 rim today. So. Welcome to the big leagues, Doze boy. That's what happens when you race these expensive cars. They're expensive. You don't just buy them and stop paying money. So, such as it is. But nonetheless, he had the time of his life, and I'm right now it is basically 8 o'clock. The sun's still up. I might go back to the track. He's still there, kind of hanging out and stuff like that. So, we're going to go ahead and shut the broadcast down. I'm going to get on with the rest of my holiday weekend. Thank you very much for joining us. So, again, my name is Red Baron, and for Red Bear, signing off. So, during this time, be good, be safe, and be good at it. Peace and hair grease, baby. Talk to you later.